All right. Hey, we are live. Good morning, everybody, in the free credit repair advice group. I'm Jeremy Deysach, Credilife FICO Certified Credit Coach. And to my right is,
This is Chris Krueger, better known as Coach Chris in the group, also a FICO certified Credilife credit coach.
by the way, it's Coach Chris Day today.
It
So
is. It is.
he's gonna be dropping some knowledge on you guys, maybe an article, some cool stuff,
Right.
some posts. So stay tuned for that. But what we're doing right now is we're doing a video test because what we're trying to do is make sure that everyone can see these things when we do go live in the free credit repair advice group. As all of you know, Facebook, they love making changes. And as they've been testifying in front of Congress, they love controlling what people get to see.
Yep.
And so, what we thought we would do is I made some updates here. I want to make sure that we are indeed being seen by as many people as want to be seen. So, what we're doing is an impromptu questions and answers session. If
Right.
you've got questions, any credit questions at all, you've got right now for free two FICO certified credit coaches on here going to answer. We're not going to say, no, book a consult and hire Credilife. What we're going to say is the answer to your question. So go ahead and chat. I'm monitoring the chat for this. We're going to answer any credit questions you've got. Could be about lates,
Right.
could be about investigations, it could be about what's the best way to manage your credit cards. Literally, it is wide open. If you've got a question you were thinking of making a
Yep.
thread, or if you've got a thread and none of us have answered it yet, now's the time. Go ahead and drop that right down into that comments section here, and we're going to go ahead and we're going to answer all your questions for you. I see right now we did spike up to 18 people watching right out of the gate.
Nice.
So obviously some of the changes are effective. But here's what I'm going to talk about in the meantime. Until you guys come up with some questions here. We talked last night about the right balance to limit ratios to
Right.
use on credit cards, revolving accounts, especially going into the holidays. What's the best thing to do when it comes to your credit cards as far as the usage that's going to get the most points every month? And so, what we told you last night, we'll tell you again today, for those of you who missed it, was when it comes to the FICO algorithm, when it comes to maximizing your points, there's a perfect zone, a perfect region with credit cards. It's 1% to 3% usage, 1% to 3%, no more, no less. Now, there is a common misconception out there that you can charge them up and you can pay them down just in time. That's something of the past, you guys. The lenders have caught on to that, and they've requested that the bureaus, Equifax, Experian, TransUnion, keep trended average daily balance. And with those trended average daily balances, they'll now know if normally really keep, $1,000 limit, but you go ahead and you pay it down right before it's due. So your real threat level is that you carry 1,000. Your real threat level is not that you're at $9. And they know that now, and that's being factored
Correct.
into the FICO algorithm.
Yep.
That's a good piece for people to know what else going in. Just while and please, if you guys have questions, we want to know that this test video we're doing is interactive, that it's working. Please, for the love of God, even do me a favor, throw me a thumbs up, throw me a hello, drop down in the chat, say, hey guys, good to see you. We're not in our normal time every day. Yeah, you can say, my gosh, Jeremy, you are extremely attractive. I've always meant to tell you that you can put that if you want to lie to me in the comment section.
If you've got to think of all guys, put it out there,
Absolutely. What other cool stuff do we want to just tell them? We're just going to drop some knowledge facts quick.
I wanted, as long as we're doing this, I just wanted to share, because, like you said yesterday, we talked about, how to manage your credit cards. Try to survive through the holidays and not
it's gonna be crazy, guys.
into the credit card trap of spending everything on your credit cards. We want you guys to have a great Christmas. We want you to really enjoy the holidays, but we want you to be mindful of your spending and not do what most people typically do, is live on their credit cards and get yourself into that debt trap through Christmas. I mean, that is so common, right? Now, before you interrupt, I'm going somewhere with this one.
Go ahead.
So something that I want to get across to people, because this is the time of year, and for everybody out there who is considering trying to qualify for mortgage financing to buy a home in the spring, right? This is where, if you don't do mindful spending, this is where you screw up.
This is where you lose your house.
This is where you lose your house this time of year. You need to be mindful of your spending now if you plan to purchase that home in the spring or even in the summer, right? If you screw up now, you're going to be pushing yourself to next fall or even the following spring, okay? Right. So it is absolutely critical. And if you are thinking about purchasing a home and you have credit issues, if you've got things on your credit that need to be cleaned up, that need to be repaired, now is the time.
Now.
It takes time. This is not a quick process. It doesn't happen overnight. So now is the time to start.
Love it.
If I don't care if you're doing it yourself or if you want professional help from the credit coaches here at Credilife, but you need to start now.
Orlando, you got to invite T-Love to the group. I see she's gray. If you want them to join the group, you got to invite them to the free credit repair advice group. They'll be able to come on in too and ask questions and all that stuff. By the way, we do lives. We typically do them on Wednesday night as a weekly, but we're doing this right now because we're testing out some technology. And hopefully you guys get to be the beneficiaries of that. Here's something I wanted to talk about. This is something to think about, you guys. So how do we get by through the holidays without dropping coin on the credit cards? And Chris, you know I do this.
Yep.
I don't need it for my credit anymore, but every single year I open a self-lender account, a 12-month self-lender account. In fact, I'm going to get up the info in case you guys are interested in that.
Yeah, I was going to say perfect. Let's explain exactly what a self-lender account is and how it helps round out your profile.
Absolutely. So a self-lender account, this is a pretty wicked little account. What it is it's a forced savings account where you make an equal monthly payment every month into the savings account. At the end of it, they cash it out. Now, I do a $1,000 one for a 12-month period, which means I put in it's like $88 or whatever per month until the 12 months is up. Now, because I've made installment payments on a $1,000 bank obligation, they report this to Equifax, to Experian, and to TransUnion as a $1,000 bank obligation with monthly installment payments. What that does is that rounds out my score. It rounds out and builds my profile. But here's what I'm doing. Every November 1st, my self-lender is done. And I get a check in the mail about 5 days later for $1,000, right before Christmas shopping time.
Plus a little bit of interest, right?
It's plus some interest. It's my Christmas account. And then I start another one right when that one's done. They send you an email saying congratulations, you're done with it. I'll tell you, you're done with the program here. And if you want to open another one, open another one. I just opened up another one, like $88 a month again. But now I've got 7 kids. So this is crucial that I have a cash injection before the holidays. So I get $1,000 cash in my pocket. And I can give the kids each, I always like to do, give them each $100 bill and then some presents. Cause when they get to be teenagers, what they want is money. Really, so frankly, in their
7 kids. So what you're telling us is there actually are ladies out there that like bald guys.
There are, yeah. Oh yeah, I hit way outside of my batting average. I fought. Let's just say I fought above my weight.
Right.
And won.
And won. Right.
So So this, I went ahead and I put information on self-lender, right, explaining what it is right here in the chat. Now this isn't going to help you. This is not going to help you this year. This year's already there. But if you don't have one of these open with next year in mind, you can open one today. It's the 19th. That thing will pay out the 20th of next November. And that next year, that's going to be just in time for Black Friday. That's going to be just in time for holiday shopping, regardless of your flavor. If it is Christmas, if it is Kwanzaa.
You might even be able to go out to the stores next year.
Yep. Absolutely. Yeah, you may be able to. Hey, Mateo. Hey, Cheryl. Good to see you. We're doing a test run of the software just to see the exposure. I made some tweaks and some updates. But I'll tell you right now, like I said, if you don't have a self-lender open as a Christmas account for next year, now's the time to open it so it'll cash out in time for the holidays next year. You will, guaranteed, because it's a bank. It's a FDIC insured. You will guaranteed have $1,000 in your pocket, and you'll have rounded out your profile and raised your score while you tuck money away, and you're good for Christmas next year. So if you're worried this year and you're like, man, with COVID and stuff, I got to use my credit cards for my family. Well, guess what? If you gotta, you gotta. I'd like you to avoid it, but I'm a realist. I'm a dad. If you have to use your credit cards to give your kids a happy Christmas, well, then you've got to use your credit cards. But you got to rebound from it fast, pay them down fast, and you got to start planning for next year now. You got to do some mindful spending. For me to spend $88 a month into an account I don't get to touch until Christmas time and it cashes out $1,000, it doesn't get more mindful than that.
Right.
It's earmarked. It's got a plan. And the side effect is it gives me awesomeness at the holidays. Hey, Cheryl's asking, mine closes in January. Should I open another one now? Now, Cheryl, if you're using Self, I would use Credit Strong, the other one, because they don't let you have two Self at the same time, I don't think. They don't let you have two Credit Strong at the same time, I don't think. So if you've got one that closes out, then just switch brands. It's tomato.
So for Credit Strong, though, if you want to do the mindful spending and expect to be able to get the cash out, you need to do it's
12-month term.
Yeah, but don't do the $15 one because you're not really building up equity in that one. You need to do the next step up.
Good comment. Absolutely good. Hey, we got a question. Mateo says, what is the percentage of successful home buys after your program? Well, here's the thing. I don't know that figure off the top of my head. I just wrapped up a file for somebody who just completed their purchase. So there's another one in the books for you. Okay. We do it every day. They happen every day. You'll see them posting here. I can say this, 90% of the people who work with us, their goal is home ownership. The vast majority of the people all do follow the program and succeed. I don't have the numbers handy. It's probably something I should have, but I don't. So,
it's not something, it would be interesting to go through and crunch all that over the years.
But yes, the vast majority.
It would be fun.
The bulk, vast majority. Otherwise, people wouldn't talk about it like they do in the group.
Exactly. But that being said, I do have a slot open for somebody else who's looking to get themselves ready for a home or improve your credit. Because I just graduated somebody out. So
hang on, guys.
Get on the calendar.
I was looking. One number I do know, Chris, I know you've got 27 spots left before the end of the year to enroll people. I was looking at your calendar.
Perfect, thank you.
I was looking at I
didn't know what it was off the top of my head.
Yeah, here to book a consultation to enroll in Credilife and have FICO.
Now that number will change if somebody graduates
certified,
because we're always trying to push
credit
to get people through the program.
Coach Chris as your coach.
There you go.
Go to, this is easy, you guys, www.book.
Book Coach Chris.
CoachChris.com. And what you're going to get to do, he is a very available dude. You can pick a day, an evening, even a weekend that works for you. Here, what you want this? Watch this. I'll make it into a. There we go. You're gonna like this.
Awesome.
What's that? Look at
scrolling banner.
Right across the bottom. Right? Yeah, so by the way, if you guys need a credit coach, a FICO Certified Credit Coach, right now I'm at basically book out. Chris, on the other hand, he's got 27 slots left to enroll people to get them in a position. Now, people stay with Credilife on average. Right now with COVID, it's gone up a little bit. On average, 7 to 8 months. 90% of the people are looking to get a house. So by that math, you figure about 7, 8, 9 months, because it takes time to close on the house, till you're in a home. So we're talking you're in a home for Christmas next year because you went to www.bookcoachchris.com. You picked a day, an evening, even a Saturday for an initial consultation. And you talked about your goals, talked about what's going on with your credit, put together a plan, a set of steps, action items to get your score, your profile, and position for the goals, got you enrolled in the program, and bam.
And we encourage everybody. The push is to get you into the program if you're looking for the professional help, and then work to get your credit ready for your goal. Now, if your home purchase is let's say, hey, Chris, I'm not going to actually purchase a home until, say, the fall of 2021.
Right.
But I want to get my credit in position now. Well, we're going to get you ready, and we're going to teach you what you need to know about FICO to manage your credit going forward.
Yeah,
and then
you
when
got to
your
get ahead
credit
of
is
this
ready,
thing.
you got to get ahead. I mean, I get people that I love it when I get people that call me because they want to get signed up because they're thinking ahead, right? They're planning ahead like that. Rather, and I don't get me wrong, I don't mind it when somebody calls me and says, "Hey, my loan officer referred me over because I didn't qualify."
Right.
It doesn't matter. We're going to help you get ready for that mortgage financing as fast as we can, so that we can cut you loose from the program when you're credit ready and you have the knowledge to continue managing your credit how FICO likes, and then you can pull the trigger on getting that mortgage when it's your time to do that.
That's
right?
what we're saying. So yeah, go to www.bookcoachchris.com, schedule a consult. We got a question. Elizabeth Emery says, I'm keeping all 3 of my cards at 1 to 3%, but I'm wondering,
Awesome.
can I use them every day or large purchases to get the cash back, then pay them down before the statement date? Does this affect anything when lenders are looking at my habits, or was hoping for a limit increase from Discover? Would it be better to just spend the 1 to 3, or do they want to see more spending with large chunk payments? There's a lot of different
like 4 questions in there.
Yeah. Let's start out with this. The FICO algorithm does look at trended average daily balance. So if you charge them up and pay them down, they're going to know that's going to get factored. Now,
and mortgage lenders are going to see that.
Right. Now, if you're looking for all new appliances for the kitchen and you've got a Best Buy card or you got a Home Depot card, and by charging on it, you're going to get 20% off of an $8,000 purchase. You're going to get $1,600 off. Yeah. If you don't use the card, I'm going to kick you in the backside. If you've got the cash in the pocket and that card, use that card, turn around, pay that cash right away. Use it for that discount, because, I mean, even if it goes up a little bit, boy, you can buy more than enough credit repair to fix that for $1,600. You're going to be fine. But the problem we run into is the one time we do that and then COVID hits and then we're jobless for a while, or the car, the brakes go out on the car or something comes up, and that's how we get stuck behind the 8 ball. So from a credit standpoint, it is best to never exceed 1 to 3%. From a real life standpoint, if the discount's huge on something like that, or let's say you're spending $2,000 on Christmas time and you can get $100 off at Target by using the red card, get the 5% off. Go ahead and do it. Walk over to the Target customer service and pay it right away. So you save your $100. Yeah, you saved your $100, and yes. Is there going to be a little blip? Yes. Is it going to impact your score? Yes. Is it going to be much? Not much, because one day of it makes the trended average daily balance not too bad. But if you have it for several days, it's going to, it's like anything. It's just spread out.
Exactly.
So, and should you use large purchases to get them to prompt them to raise limits? That's not what they do it off. They do it off of overall available revolving credit, overall risk based on income. They do all these calculations. What
kind of competition are they up against?
Yeah, what type of competition? What's Capital One offering this month now suddenly? And right now there's been a flight to quality. So everyone was going, man, I'm doing these things, but I asked for increases, it's not happening, or I haven't seen an increase in a while. The banks are doing a flight to quality because of COVID. Translation, flight to quality is bankerese. It's a language. It's bankerese. And what it means is, we're scared crapless to lend money to anyone because there's an unfinished election, there's COVID, there's been civil unrest. So for the time being, we're just going to leave things as they sit, and we'll worry about it in 2020 because we made it through, or in 2021 because we made it through 2020. We're just going to sit pretty. That's literally what's happening. It's not because you didn't make a big purchase. It's not because you made little purchases. It's not because you're not charging it up and paying it down. It's an industry-wide tightening of credit. Great example of that, Wells Fargo stopped entirely doing home equity loans. Home equity loans were one of their most profitable operations for their entire mega bank. And they've stopped doing them until they figure out, till the flight to quality is over, till they figure out what the outcomes are going to be.
If you've recently had a credit limit decrease, even though you're like, well, what did I do wrong? You didn't do anything wrong. Yeah.
Or is it because I didn't spend more? It's not.
No, that's not what it is.
It's a flight to quality.
The banks are doing risk assessment, and they decided to lower their risk, and so that's what you saw, a credit limit decrease.
Yep. Mateo says, I just closed out FIG loans and self-lender, but Credit Strong's got 9 years to go. I opened them all at the same time last year. Mateo, I'd open up another self-lender, 12-month term, use it as a Christmas fund, and you're going to have $1,000. Do the $1,000 one, you have $1,000 cash in your pocket next year, and you've got another installment account. You're gonna be rocking and rolling.
There you go.
All right, Mateo's got that. That's great. We're actually obviously getting the. Hey, you're welcome, Elizabeth. I think we're getting the exposure that we're looking for with this. I'm feeling a lot more confident in how this is working out. There's 12 comments total in it. So yeah, this little technical, whoop, here we go. I'm getting loud. This little technical test is working out great. Orlando, good. You invited? Oh, he's buying a home, so that's important. Yeah, absolutely. Awesome. Bring T-Love on in. Let's see. We got everybody's questions. Oh, you're welcome, Elizabeth. Here, do you guys, Mateo says, do you guys send out the letters, or what's the process you help clients with credit? I'm going to let you take that away, Chris. This is your day, okay. So I'm going to let you do that.
All right, no problem. So I don't know if you ever hired anybody else to help with your credit before. There's a lot of companies out there that we call them letter factories. Typically, all they want to do is get hold of your credit report, mark up everything that's negative, right?
Send letters.
And send letters. And some of them will slow play you. They're only going to investigate a few number of things each investigation period, right?
Right.
And, they're more interested in just keeping you on the monthly hook than anything else, right? So Credilife is different.
You are correct, sir.
Yes. The Credilife is different. We put this company together to do the best job we can for you as fast as we are able to do that within the parameters of being able to do this whole, under Fair Credit Reporting Act, all the rules associated with this. Mm-hmm. So to answer your question, right, because I know I'm kind of elaborating, we handle the letter creation and getting them out in the mail. Okay, it's your job. Yeah, it's your job to watch for the results to come back in your mailbox, and then if you're a client of ours, we want you to send that to us so that we can review those.
Or any other credit related weird stuff.
Yeah.
Anything that you're not normally getting, something comes in the mail, let us see it. We may tell you it's nothing. It may turn out as crucial, but no matter what, you've got coaches, you've got client support. You'll have eyes put on these things. You are not left to flounder with some letters that you got to print yourself and things like that. Instead, we work on eliminating the negative through that investigation process, building the positive through coaching on going development, and then dealing with the money where it lives through an integrated program we've got called Money Mastery that's all about mindful spending, debt reduction strategies, and savings.
So if you have had somebody else work on your credit, did they help you with building your credit, managing your credit, getting to your goal? Did they teach you about FICO? Did they have FICO certified coaches to help you do that? I'm going to guess the answer to that is no.
Well, that's because you know the answer. We have almost all the FICO certified coaches in the country.
They're all here. You can't get FICO certified anymore. It's not a thing anymore.
Yeah,
that program went away. So
snap, ready? Snap. I told you I may be using the crap out of that thing.
Right.
That's awesome. I love that.
That is awesome.
Great questions, you guys. Oh, you're welcome, Mateo. Thanks for coming in and letting us helping us out, because you're helping us right now as much as hopefully we're helping you, because we're trying to make sure that we've got the interface so that the lives are a little bit sharper, that we've got our graphics, that we can do a little like this kind of action. That's awesome. So if there aren't any more questions, I'm going to give a pitch for Chris again. You guys, I tell you what, if you want to have an absolutely fantastic credit coach, go get with this guy. Go to www.bookcoachchris.com. Schedule a consult. You got room for, like I said, I saw 27 more people with people have graduated and stuff. He's got room to take on 27 clients and get them in position essentially next year to buy a home. That's huge. I mean, we're talking kids getting a backyard to play in. We're talking about all that. It's really it's what we do is absolutely wonderful.
I'm reviewing files today, and I may have some more slots open up. We'll see how it goes. But like I said, we're always pushing to help people accomplish their goal and get them through the program so that they can move on with their life.
Yeah, get on this dude's calendar, www.bookcoachchris.com. He'll give you there's no cost for the consultation, because it's to figure out
are you a good fit,
and it's to get you enrolled in the program itself. And good stuff. Well, I want to thank everybody for coming on in, letting us know that this is working better than we had expected or what we had hoped. And I think I solved one of the issues we were having.
Nice.
For Credilife and the Free Credit Repair Advice Group, I'm Jeremy Deysach.
Chris Krueger.
We'll talk to you soon. Thanks a lot, guys.
Have a great day.